What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see a lot of weak price action across the indices with what appears to be no buyers in sight and still failing to break out above resistance. Are we getting that much closer to full-blown capitulation? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.18% and we did close below the 5 EMA, and intraday we did get rejected from that resistance zone just below 380. So by far today did look like a bearish day with price action. Now we are still above this support zone at 370, so we can't get extremely bearish until we break back down below 370. But I will caution you that while SPY is below this level at 380, it is very possible that we could get that capitulation and reach that price target by the end of the month down there at 350. So the way you're going to know which scenario you're going to get by following price action is whether or not we can break above 380. If we can break above 380, we'll likely go battle the bears up there at 401 to fully close those gaps before the end of the month. But if we continue to get rejected around this resistance at 380 and break back down below 370 and lose that as support, it is very likely that you're going to see a very quick trip for capitulation to that price target at 350 by month end. So for that reason, you are bullish above 380 for the gap closes above, and you need to be a lot more cautious below 380 for that price target down there at 350. And you can also use that risk level at 370 for long trades if you do want to set up a long trade at that support. So below 380, it's a lot more likely that we're going to 350, and above 380, it's a lot more likely that we're going back up to about 401. There will be a lot of bears waiting at that resistance trend line, and there's no guarantee we even have to go up there, so you will want to wait for that breakout above 380 for confirmation from the price action that we are indeed going higher. Even above 380, there's still going to be resistance at the gap close right around 390 and our 20 simple moving average, and resistance trend line at 395. So there will be bears at those levels as well. And this is still a very strong bear market and a very strong downtrend. So please do not be getting overly bullish in a bear market. Nobody knows where the bottom is, and even though we do have a price target at 350, there's nothing that says we can't go lower than 350. So for the time being, that's our price target, and once we get there, we'll evaluate the price action. And if we need to look for lower price targets, of course we will do that. But right now below 370, you will want to watch out for that downside price target. There's really no need to overcomplicate this market, so just use that level of whether or not you're above or below 380, and the next sign that we're heading to 350 will be the breakdown below 370. As you can tell, these Bollinger Bands are expanding, so there's plenty of room to the downside. So if we do start to see that high volume panic selling, we will get the 350 in a hurry. So I would not expect it to happen slowly, and that is why I'm saying we could be very close to full-blown capitulation. If you've never seen capitulation, it's going to look a lot like what we just went through over the last couple of weeks, but we're going to see a repeat of that price action, and it's going to happen very quickly. And that's why I do caution you that we can break down below 350. Now keep in mind, none of this is trying to scare you. I want you to be prepared for what could be likely coming. And that is why you will want to wait for price action confirmation on a breakdown below these support levels before you just assume we're going down to 350. You never want to just blindly short the market because there's the possibility of something to happen. You want to let the price action confirm it. And the trigger that we could be heading down to 350 will be the breakdown below 370. So as I always say, price action is king, and that's why your trade plan should always revolve around price action confirmation and not just a gut feeling or a speculation of what you think is going to happen. Trying to predict what's going to happen is fine, but if your trade plan depends on you always predicting where the market is going and you're not having some type of reaction to price action movement, then you are never going to be a profitable trader in the market. Let price action prove everything to you and then trade accordingly. In the NASDAQ 100 triple Qs, we were down 0.15%, and just like SPY, we did have a relatively bearish day with price action. Intraday, the bulls tried to push up above that resistance right around 285, and there was a very clear rejection at that level, and we did come all the way back down to the 5 EMA for the close. So just like the S&P 500, I will give you a critical level to pay attention to, and on the triple Qs, that's going to be up here at 287. Above 287, we could run higher to fill the gap right around 299, and there will be a lot of bears waiting at that level, so there's not a lot of upside above 287 to get to the next price target. And you will have strong resistance at the 20 simple moving average at 294, and we do have a gap to fill just above 288. So above 287, it's possible we could go up there to close that gap at 299, but we will have some resistance on the way there. Now, while we're below 287, it's likely that we could come back down to retest the low at 269, And if we break the low at 269, you're looking for a quick trip to 258. So as you can tell, we are below the previous low with the price action rejecting that level as resistance. So it's very obvious the bears have the full advantage of the strong downtrend in this bear market. So you need to give all benefit of the doubt to the bears, which means it is more than likely that we are going to make that next leg lower and hit that price target at 258. But if you want to wait for confirmation, that will be the breakdown below 269. Also keep in mind, we do have this gap to fill to the downside right around 277. So you will want to pay attention to that gap as well. In the Dow Jones, we were down 0.22%, and just like SPY and the triple Qs, we had a relatively bearish day with the price action, getting rejected above the 5 EMA and closing below that level by the end of the day. So overall, that tells us there's a lot of selling pressure just above the 5 EMA, and that is always extremely bearish because as you can tell during this waterfall selling, we always stay below the 5 EMA and use that level as resistance, and that's exactly what we saw with today's price action. So don't rule out the possibility that the Dow Jones is coming right back down to 297, and if we break below 297, we do have that full-blown capitulation price target all the way down there at 276. So take this seriously because as I continue to tell you, this is a bear market, and every time we get these bounces, there is no guarantee that they have to continue. We could easily just make a lower high before the next lower low, and that is exactly what you should get comfortable seeing in a bear market. It's relentless and it's brutal and it's exactly what you should expect because the trend is your friend and we still have bear trends across all of the indices. So there's no reason that you should be surprised if we continue to make next legs lower because in a strong trend, you should continue to expect price action to move in the direction of the trend. So it's not until the Dow Jones gets all the way back above 311 that will likely lose a lot of the bearish momentum. And as you can tell, we didn't even test that level as resistance, closing below the 5 EMA. So the bears are still in full control. Above 311, the bulls will be looking stronger and they could go up there to close that gap at 323, but you will want to look for resistance right around 314 and the 20 simple moving average at 319 because those levels will also be resistance on the way to 323. So I continue to caution you that capitulation is more and more likely the longer we trade below these resistance levels. So just protect yourself and know these very critical price action breakdowns. And on the Dow Jones, that will be the breakdown below 297. On the Russell 2000 IWM ETF, we were down 0.19% and again failing to close over that 5 EMA and still getting rejected from that previous resistance at 170. So again, this is still very bearish price action. If we break back over 170, we still have strong resistance at 175 and the gap closed just above 177. And we do have that 20 simple moving average currently sitting right below 179. If we break above all of that resistance, we could go back up and fill the gap at 183. But again, I continue to caution you, these are strong downtrends, and this is very bearish price action getting rejected at this 5 EMA. So if we break down below 163, look for that next price target at 156. On the ARKK ETF, we were up 1.51% and we had a very clear rejection at our resistance trend line at $42 and we did close below the 20 simple moving average yet again. So this could be just a bounce forming another lower high before we go hit that price target at 33.7. To the downside on the way to that price target, we still do have possible support at 36.5. But overall, this is still a very strong bear market and there is no reason to expect higher prices until we break out of the downtrend and start to see higher highs and higher lows, which will require ARKK closing all the way back above 47 and then getting consecutive closes back over 52. So if we do get the bullish breakout above 42, look for the gap close at 43, and then the next strong resistance will be sitting here right around $47. On the VIX, we were down 4.17%, and the VIX did close below 30 and getting very close to that strong support, which is going to be right around VIX levels of 28. From there, I would look for the potential of a higher low in the VIX before we bounce off of that and break back above the 30s and possibly hit that full-blown capitulation price target at the VIX at 38 and maybe even into the 40s. If the VIX crushes down below 28, the next strong support on the VIX will be down here at 24, and the VIX closing below 24 will be a bullish event. But right now you can clearly see the VIX is in a bull trend and it's coming very close to support, so be a lot more cautious while the VIX is elevated above 24 and do not get bullish until we see some type of bullish price action in the indices. On Bitcoin, we're currently down right around 3.8%, coming back down to the support zone right around 20,000. And so far, it does look like that support level is in jeopardy of possibly breaking down, which does mean Bitcoin could come back down to retest this low just below 19,000 or hit the next price target to the downside at $12,000. And that is our full-blown capitulation price target in Bitcoin. I know Bitcoin has been in a bear market and it already could be possible that it reached capitulation, but there's no other way to say it that if Bitcoin breaks down below 19,000, it is very likely going down to 12,000. and that should be what could be a tradable bottom in Bitcoin. Even though it's still possible that this support level does hold up, you will want to be cautious while we have the strong bear trend. If for some reason we do get a bullish bounce off this support, look for that strong resistance up there at 28,000. On NVIDIA stock, we were down 1.24%, and NVIDIA is back down towards that 5 EMA, still in the bear trend, and does have a gap to fill just below at 160. The previous low that we bounced off of is right around 156, so if we break that low, look for the price target at 150, and below 150, we have full-blown capitulation of support down here at 125. It did look like NVIDIA possibly double bottomed off of 156, but we failed to hold above the neckline, which is just above 165. So if NVIDIA does break back over 165, that will be bullish price action, but we still do have strong resistance at 175 and the gap close at 181. If we can get all the way back above 196, that will look like a bullish breakout, but so far we still have the bear trend and we still have lower highs and lower lows in the price action. On Tesla stock, we were down 0.4% today, and Tesla did close back over the 20 simple moving average for the second day in a row, but we can clearly see a lot of selling pressure at these levels. The longer Tesla stays above 700, the more bullish it will look, but we still have strong resistance up here at 775, and that is the level the bulls need to break above to start going into a bull trend. If the bears take over Tesla, you'll see the price action breaking below 700, and you'll look for the retest below at 620 or that next leg lower at 571. However, the bulls are in control as long as Tesla is above $700, so that is by far the most critical support level for the bulls to maintain. If we do get the bullish breakout above 775, look for that next strong resistance just above at 828. On Apple stock, we were down 0.38%, and today Apple stock did get rejected from that resistance at 137 yet again. So that is now 3 times trying to break that resistance and failing to do so. So without a doubt, that still shows you the bears are in full control and they're holding Apple down below 137, and Apple is still in the bear trend and still in the bear market. The strong support on Apple that the bulls need to hold is at 130, and if we break below 130 on Apple, we will see full-blown capitulation. We're getting a lot more bullish on the breakout above 137 for the gap close above just above 142, and the bullish breakout above the resistance trend line will be the close above 144, and then the next strong resistance will be at 150. But as you can tell, this is clearly still a downtrend, and we are clearly still getting rejected at resistance at 137, so please be cautious while Apple is getting rejected because this is a market moving stock, and if it breaks below 130, that will help the markets capitulate. On the financial sector, we were down 0.22%, still failing to close over the 5 EMA and still in a very strong bear trend. So while we do have 2 gaps to fill to the upside, it is very clear the bears are still in full control. On the industrial sector, we were down 0.55%, getting rejected exactly at the 5 EMA in a very strong bear market. So just be cautious while we continue to see bearish price action across the sectors. The healthcare sector was up 1.39%, closing back over the 5 EMA for the second day in a row, but failing to close above that resistance. So we are still in the bear trend. Even though we are seeing a bullish bounce, you still need to be cautious of the rejection here at resistance. The energy sector was down another 4% today, and even after that dead cat bounce yesterday, there was just no way the energy sector was holding up, and we're back down below the Bollinger Band yet again. This is extremely bearish price action because the energy sector is extremely oversold and continues to head lower. So this is definitely a warning sign that you need to be cautious of full-blown capitulation while we're seeing all of the sectors in bear trends selling off, which could lead to much lower prices in the indices. So jumping back over to the S&P 500, there are very clear risk levels in the market right now, and the bears are still in full control of the S&P 500 as long as we have the downtrend and we have price action failing to break above resistance. So use that critical resistance level at 380 to let you know the market's getting more bullish. But if we see SPY breaking down below 370, it is extremely likely that we could finally reach that full-blown capitulation and see a full liquidation of all long positions in the stock market before we finally put a bottom in for this bear market. So respect the fact that these are strong downtrends and there is no reason to get bullish in a downtrend. Don't bother trying to call a bottom. This is a bear market until it's not, and when the bottom is in, the price action will tell us because we'll start to see a reversal off the lows with bullish price action. If you're an investor and you want to accumulate the lower we go, that is just fine, but you need to understand that it is a downtrend until it is not, and you need to get comfortable buying at lower prices in case you didn't time the bottom perfectly. As a trader, you need to know your risk levels and you need to always use proper risk management. That includes bears shorting the bear market because it's still possible we get counter trend bear market relief rallies. So know these critical levels and follow price action accordingly, and make sure you're not just trading on a speculation or a gut feeling, let the price action prove everything to you, and then trade accordingly. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.